you're paying less per click on Walmart right now and you're getting a greater return per click, that efficiency is going to be much stronger on Walmart than Amazon. Volume on Amazon is still relatively unmatched, and we actually saw sales volume increase more on Amazon than we did on Walmart.
It's good to compare both side by side. It's also good to try and understand what the story is behind each marketplace individually, to see where the opportunity is, to see what buyers are doing.
This is an election year, and so sellers are really going to have to pay attention to their bottom line.
Hello, everyone, and welcome to another episode of Human in the Loop. My name is Cameron Yoder, and in this episode, we're doing a benchmark blitz. This is going to be a reoccurring episode every now and then. I haven't really decided on when exactly or the frequency that this will happen, but pretty much you can assume that when important data and important metrics pop up, that we'll review them in episodes like this, Benchmark Blitz. So this episode is going to be a little more data heavy than every other episode that we do. If you're familiar with the Huberman Lab podcast, which you should be if you're into any sort of health optimization or life optimization, Huberman often tends to get in the weeds sometimes with data to back up broad points. That's my goal with this episode. We're going to get in the weeds of a lot of data. If you're not an advertiser, you might hear some terms tossed around here that are a little confusing or that don't make much sense to you. But it's a good place to understand. This episode is a good place to understand what's going on in Amazon's marketplace, what's going on in Walmart's marketplace, and what's going on between both of them compared to each other and individually. So if you're wondering about what the economy is doing to buyer behavior, what the economy is doing to advertiser and seller behavior, this is a good episode to listen to. I'll give an overview. I'll try to summarize a lot of things in the show notes themselves to point out some of these metrics. Some really important things to cover, some summary things here. Data indicates a softness in the economy. You see this played out in 2023 compared to 2022. Walmart holds a higher efficiency compared to Amazon. However, Amazon as a whole has a lot more sales going on compared to Walmart. That's not a surprise to anyone. But we see an interesting difference in buyer behavior on Walmart compared to Amazon. Walmart has a lower AOV on average compared to Amazon. This indicates that people are buying like lower cost things, which circles back to Walmart's positioning as more of an everyday value platform marketplace. And as time goes on, it is interesting to see Walmart take different stances than Amazon. I'm not saying one is better than the other. I'm just saying that as both of these marketplaces mature, the data is indicating how buyers are treating these marketplaces differently. And data also is indicating that Walmart is certainly picking up steam in terms of the number of people that are buying things on its marketplace, but that Amazon still remains supreme as the marketplace to buy things and to sell things. So there's a lot of data in this episode. If you're listening, I would encourage you to watch this on Spotify or on YouTube, as there will be a lot of visuals that we cover. All that being said, let's get into this benchmark blitz and let's talk about the data overview for what happened on Amazon and Walmart in 2023 compared to 2022. Let's get started. All right, everyone, we're having our first edition of the benchmark blitz. This is going to be a reoccurring series based around whenever good data comes in that we want to talk about, we're going to do a benchmark blitz. TBD on exactly when that will be, but this is our very first one covering the entirety of 2023 and then some, a little bit. This is as up to date as you can get. And I'm joined by Laura Pattison today. Laura, thank you for being here.
Of course.
Laura will be a familiar face on the podcast. I'm just telling you that right now because she is the all-knowing expert over everything ever at Teikametrics.
Ever? Okay.
Over advertising.
Okay.
There's advertising and data. You got to live up to that title, Laura.
Okay.
Over data, advertising, everything in between, Laura is one of the best to speak to. So this episode is our first benchmark blitz. Laura, just talking about an overview of what we're going to cover today, what should people expect from this?
Yeah. So today we want to talk about performance over the last year of advertising specifically. on Amazon and Walmart. And we'll take a look at Amazon and Walmart side by side to understand where there is opportunity, the changes that we saw in both of those marketplaces, the consumer behavior, and what that indicated in terms of the economy and how that impacted sellers. And then we'll want to deep dive a little bit into each market individually. Of course, it's good to see them side by side, but really understanding, how did your performance compare to kind of the average across the board on Amazon and on Walmart specifically. Of course, when you look at combined metrics, you don't always see the nuances in performance that you do when you zoom in.
Yep.
And so we'll take a look at each of those and a couple of those indicators for the next year to come as well.
That's what there's data tells a huge story. Data is everything when it comes to analyzing what happened in the past. There's a lot of analyzing what happened in the past, but that is a clear indicator for where things are right now in the market. And Amazon and Walmart are clear indicators for the market, by the way. That's what we'll be looking at. But it's to look at the past is to look into the future. At least no one can tell exactly what's going to happen in the future, but data like this is a really good way of understanding what might happen, or at least, the very least, what happened over this past year. So, okay, Laura, you ready to blitz this benchmark data?
Let's do it.
Okay, let me share my screen here. For people who are listening, this is one episode specifically that is very good to watch the video. We're going to have some visuals, some slides showing the data. It's still worthwhile to listen, but there's going to be a lot of visuals we use. So YouTube, Spotify, you can watch the video as well. Sorry, Laura, go ahead.
No worries. We'll be descriptive as well with what we're seeing in case you are listening. But yeah, let's dig into that one metric, that comparison metric that everybody wants to see, which is efficiency, efficiency between Amazon and Walmart. So you'll see here, really, as Cam was mentioning, where we are right now in terms of performance data is really important to know where's the starting point for the next year. And so that's why it gives us such good indicators. And so we actually looked at by quarter for the last two, because just starting at Q1 of 2023 doesn't necessarily give us kind of the behavior that we've seen over the past couple, what might have been influencing where we started in Q1 of 2023. So looking at this graph specifically, we see that Walmart efficiency was really, really strong in comparison to Amazon in 2022. And that premium, that efficiency gains of Walmart over Amazon actually began to decrease a little bit over the course of 2023. Now, Walmart still holds a much stronger efficiency than Amazon at this time, but starting to see those two lines merge, again, not close, but they're heading in that direction, is indicating the growth on Walmart, the increased competition on Walmart. And there's a couple other graphs we'll look at for that. But it is really interesting and not surprising that Amazon, as large as it is, has remained so steady while this emerging marketplace, at least in the digital space, is seeing the fluctuations of efficiency in response to competition.
Yeah, so this is really important to point out. And one stipulation for the data today is that we won't be using exact numbers, right? So for specific percentages and numbers to give a better insight into this data, you can go to our benchmark reports on Teikametrics. So these are just to give a really good idea of like the differences and where they stand. And Laura, you're talking about efficiency here. Can you describe, like, when you say efficiency, this is of advertising specifically, correct?
That's correct. Yeah, we are looking at ROAS here, which is your ad sales divided by your ad spend, the inverse of your ACoS if you typically measure with ACoS. This is not looking at tacos. We are looking at ads specifically, and that's because there's so many other factors and influences that impact tacos, especially when you are looking at an aggregated set of data across many clients, their brand presence, their investment, their goals for incrementality versus efficiency. All of those are going to influence tacos, which is your ad cost divided by total sales. So we are looking specifically at ads efficiency here. And you're right, we're not looking at specific numbers. We want to understand trends and directional changes in the performance of each of these metrics.
And it's fair to say, of course, we'll get into some differences between Amazon and Walmart and other metrics here, but clearly efficiency on Walmart is a much more efficient place to run ads than Amazon. That's what this slide is telling us, right?
That's what this slide is telling us. Yeah, absolutely. So, I mentioned that part of the reason that Walmart, had seen it really bumped in terms of efficiency mid 2022, Q2 and Q3 of 2022, and then kind of leveled back out in terms of efficiency. Saw a little bit of merging towards Amazon's efficiency. A lot of that has to do with that competition, and so we wanted to take a look at CPCs, and we see that CPCs for both Amazon and Walmart trended up pretty much every single quarter this year. For Amazon, it landed back to a CPC level we saw in 2022. So there was some fluctuation. Ultimately, it's staying within bounds that we have seen. But Q4 CPCs were definitely in the top range in the past couple years on Amazon. And Walmart CPCs are kind of steadily increasing, again, indicating that there is increasing saturation in the marketplace and increasing competition. What this should not scare you into not adopting Walmart if you haven't. It's telling you to do it and do it now, actually, because you want to be that first, or I guess now maybe second mover, and get that advantage as early as possible and get in there and establish your brand. There's still that efficiency increase over Amazon. So definitely get in there and get your brand established on Walmart. But we are starting to see increase in volume and number of sellers on Walmart that's driving up CPCs.
That's for people who are listening or watching, the interesting thing about data, especially in the sequence that we'll go through, is that the story will build. So we talked about efficiency, CPCs. What we're talking about now is competition. The main takeaway here is that there's more competition on Amazon than Walmart, and the cost for running ads is higher on Amazon than Walmart, right?
Yes.
Is that too simple?
The second part is definitely true. Now, in terms of competition, Amazon definitely has a greater number of total sellers, and so competition and sellers and vendors. I'm gonna kind of just call them sellers, both the same number of brands on Amazon. But there is ultimately going to be, there's price elasticity everywhere. And so, there's going to be a limit, not a hard cap limit, but CPCs will reach a breaking point before nobody can really maintain profitability. And so it's interesting, are we reaching that breaking point on Amazon? Will we continue to see CPCs increase with competition? All of those factors are going to be important to pay attention to over the next year.
We're only 2 data points in, but I had imagined that because Walmart is a bit smaller in relation to sellers specifically, that perhaps the swings of the data points will be greater, meaning we'll see greater changes in those. Is that true?
Absolutely. Yeah. Anytime you're dealing with a slightly smaller data set, you're, one or two influences can really impact the trajectory. So yeah, that's absolutely true. As you're growing, you just see acceleration and deceleration amplified.
Yeah. The theme has we've been harping on this since the beginning, but Walmart, if you're going to get in now, now is better than later. The swing, the trend, even on this, and then back to the efficiency from the last slide, just points to that. All really good points. SPC. What is SPC?
SPC. So this is sales per click. What does that matter? So I talked about competition increasing, and it's, how can you be so certain that it's competition? Sales per click or value per click, those two things are very interchangeable in this space. Indicates, how much on average am I getting out of each click from a consumer, right? We know we have to pay per click. So that's where we incur our cost. And then sales per click, what happens after that's driving the value. And so if we see sales per click increasing, we're willing to pay more for that click because we can maintain efficiency, right? If you're getting more sales per click, you're willing to pay more per click. and you still are kind of at that, you're still at that same efficiency depending on growth rate of each.
Yep.
And so we want to look, when we start to see CPCs increase, we want to understand, is that because the value is increasing, or is that because your brands are being forced to pay more per click in order to remain visible and competitive? And so, I kept saying CPCs are increasing because competition is increasing. This kind of backs that piece up that, yeah, we saw some fluctuations here, but this was relatively flat in 2023 for both Amazon and Walmart. We saw sales per click increase on Amazon specifically in Q4, as we expect, right? People are more willing to part ways with money during the holiday season. And so that wasn't totally surprising, but the fact that CPCs were increasing while that value per click was remaining relatively constant indicates they were having to do that in order to stay competitive in the space.
That's what I get two main things from looking at this data. One is that SPC, sales per click, remained relatively flat, minus perhaps that first period for Walmart specifically where it jumped up. Maybe that was just early data and the building of the data that this is coming from. Regardless, flat sales per click, that's point one. Point two is that Walmart is above Amazon for sales per click, meaning more people, at least according to this data, more people are buying products from clicks and ads on Walmart. Perhaps not more people, but a greater percentage of people are buying after clicking on an ad on Walmart compared to Amazon. Is that accurate?
Yeah. So
not
there's
the number of people.
No, right. So there's two primary metrics that drive sales per click. So I've already clicked through what is driving value then, and it is what is the likelihood that someone is going to purchase, and so that's our conversion rate, and how much are they going to purchase it for, right? If they are purchasing 10% of the time for $1, that's not quite as attractive as 8% of the time for $15 or $20. And so both of those two metrics matter a lot. And so we'll actually take a look at conversion rate and AOV here in a second. Hold on one moment. Yep. The one thing I do want to call out, as you're stating, Walmart right now has a higher sales per click. When you combine that with that and a lower CPC, that's where you're getting that strong efficiency increase, right? You're paying less per click on Walmart right now, and you're getting a greater return per click. That efficiency is going to be much stronger on Walmart than Amazon.
Yeah, that's huge. Okay. Ooh, the story continues. What else we got? The story
continues. So yeah, let's take a look at what's driving Walmart's value per click to be greater than Amazon's at this point. You see a little asterisk beside conversion rate here. And there's something important to call out between how we measure Amazon and Walmart conversion rate. Walmart conversion rate currently reports units per click rather than conversions per click, right? Orders or conversions per click is kind of the standard measurement of conversion rate. Walmart shows units per click. So it does inflate this view a little bit. So I do want to call that out.
Yeah.
But ultimately, Amazon units per click. So if we were to back into units per click for Amazon, it's relatively steady. It's about 1.08 or 1.1. And so this changes actually pretty minimally for Amazon. And so we do see that Walmart returns a higher conversion rate. Once somebody is on Walmart, they have a greater likelihood of conversion, whether that's because they're buying more CPG goods and it's just, quicker to get through that way, or whether people do spend a little more time to research. They're doing a little more due diligence and understanding the product, where the product is coming from, et cetera, on Amazon. That is probably best to be broken down by category. But that conversion rate does indicate our next view, which is AOV. And I mentioned that CPG, the fact that it's more household goods, this is our AOV. Walmart AOV is pretty notably lower than Amazon.
Yeah, wow.
And so that's indicating you're getting some of those household goods. Maybe you're doing, store pickup or whatever that is, where it makes it really accessible. But that's why it's not surprising to see conversion rate that much higher when AOV is lower, right? You don't think about spending $5 and, converting really quickly versus when you're spending $20 or $50. And that's obviously not the range here, but
Right.
it's just good to keep in mind.
Which is, I mean, there are a lot of things. This goes so deep, right? This data gives a really good overview understanding of both marketplaces compared together. And we'll get into each individual one. But the interesting thing about Walmart is driving like everyday low value, great value. Like people are, I believe people are coming to Walmart with a greater intent to purchase something specific that they are aware of, that they know about. But the AOV points to like that great value aspect that Walmart really owns and has owned for a long, long time. This to me is not a surprise. Perhaps the quantity lower is surprising. Also surprising, perhaps, is the consistency of the average AOV on Amazon. It's very flat.
And again, when you're doing comparison metrics and one fluctuates, one appears to stay more steady. And so when we zoom into Amazon, all of these steady metrics may look a lot different just because the scale changes when you
Yeah.
remove something like Walmart. But ultimately, as we take a step back after looking at efficiency and CPCs and sales per click and conversion rate and AOV, let's talk about what this meant overall in the economy and in the space in general. So, one, especially this AOV, tells us a little bit about the state of the economy. You can see,
Mm.
especially on Walmart, AOV was much lower in the first half of the year, and it started to steadily increase. This indicates people were really shopping for, that it's the EDLP, everyday low price platform. They were looking for that best price. They were, holding on a little tighter to their wallet in a lot of these cases. And so it does indicate to us that the economy was soft, particularly in the first half of the year. At least the perception of the economy was soft in the first half of the year. But it did steadily increase in the second half, where we started to see it appeared that people were feeling a little more confident, at least in the ways that they were shopping.
That's interesting. So a little softness of the economy in the first half of 2023, and obviously on the screen you could see increasing over time. Is this more not comparing it to 2022? It looks pretty typical, but is this? Would you say that this is atypical compared to like years past?
I think that the decline between, and again, specifically looking at Walmart because we can see the changes
Yeah.
here a little more clearly, but you can see it on Amazon as well. Seeing that decrease from Q4 to Q1 is not surprising. I do think it looks pretty like a pretty stark drop off, but ultimately it's not below where we were in previous quarters, so it's still within kind of those bounds of an acceptable standard deviation.
Hmm.
Seeing that steady increase, though, indicates that people were feeling it was softer at the beginning of the year. Now I'm looking at AOV. AOV and conversion rate are going to be the two metrics that we really look at to understand buyer behavior.
Yeah.
CPCs take into account not only the buyer behavior and that sales per click, but it takes into account the advertisers' willingness to spend. And so when we want to look kind of at buyer behavior, which indicates the economy more closely, we're going to look at AOV and conversion rate. How willing were people to part with their money?
Hmm.
And, it's going to depend again on category and are you necessity goods?
Yeah.
There's the lipstick theory, right? Where everybody still wants one to buy one thing that brings them joy. And it's what is the cost of that? And so, something like lipstick is maybe a treat a woman still buys herself. And so you see that succeed, but maybe the higher end beauty products start to take a hit. And so
Hmm.
you see that AOV fluctuate overall. And those are the indicators that we're paying attention to.
That's very interesting. Interesting to see them both compared side by side. Are we ready to dig into each individually?
The last thing I'll mention, I was talking about the buyer behavior and looking at conversion rate and AOV for that. But we did talk at the beginning that CPCs were increasing.
Mhm.
And so that sales per click, like we said, was mostly flat if we look
Yep.
back at that. But CPCs were increasing. And so what that tells us is our advertisers or brands on both of these platforms were feeling that their margins were getting pinched.
Hmm.
They're having to spend more on advertising, but they're not necessarily getting more for each click that they're gaining. And so profitability and margin really accelerated as themes and conversations in the world of advertising over the last year. So if you felt that, you were not alone.
Yeah.
We know that that was a big struggle and piece in general to the conversation. So that's the last thing I wanted to call out is, CPCs on both platforms in combination with that sales per click did lead to tighter margins.
And I think that adds to the story around like the buyer behavior, spending in the economy, people maybe being just like marginally more and more um, intentional with the money that they're spending. I think that these reinforce that point that you're calling out in terms of economic softness and buyer behavior.
Absolutely.
Yep. Okay, let's talk about Walmart.
Yeah.
Okay.
All right. So this now we want to compare 2022 to 2023. Just for ease of reading these graphs, 2022 will always be in gray just because it's a little bit more in the background for us. But as we mentioned, as we were looking at those last graphs, 2023 did see some decline in efficiency on Walmart. Just again, as competition increased, there's more choice, right? So your conversion rate may go down as there's more options of people to buy from. We know there was some resistance, at least in the beginning of the year, to part ways with money. You're really looking at the best price. And so we saw brands were having to adjust pricing and understand price elasticity in order to still get shoppers to part with their money and the feel when they're feeling that the economy is a little softer. And so, we talked about this a little bit, but definitely emphasizing the difference in that efficiency on Walmart year over year.
Yeah, it's interesting to compare this, especially if you imagine the lines connecting, like the purple line connecting at the end of the gray. Easy to see like upward and then downward trend. Makes me
Yeah.
wonder what's coming next. I guess we'll maybe talk about that a little bit, but interesting to see this comparison for Walmart specifically. It also, this is a good, so it's good to compare both side by side. It's also good to try and understand what the story is behind each marketplace individually, to see where the opportunity is, to see what buyers are doing. This perspective gives us a better view into that for Walmart specifically, and we can talk about Amazon as well.
And I do want to mention, again, just for those who don't have the visuals, we're talking about Walmart efficiency is declining a little bit. I just want to emphasize the differential is still about 46%. Walmart efficiency is still
Wow.
about 46% greater than Amazon. So as we're saying, there's some decline there. It's still a notable difference where, there's a lot of opportunity on Walmart.
No, that's a really good call out.
So CPC is increasing and it really feels like it's kind of quarter over quarter over quarter here.
Sorry.
Yeah, you were on CPCs. But it really is like, if you look at that gray line connecting to the purple line, it still continues kind of up and to the right. And that's exactly what we expect for a marketplace. And it's weird to call Walmart an emerging marketplace. It's been around for forever. And
Yeah,
it's,
yeah.
such a huge brand. But in the digital space, we are seeing in the advertising world more adoption by brands. And that is going to be driving increased competition. Again, even with that increased competition, there is still such potential, but we are
Yep.
seeing it's getting a little more competitive.
This slide does not surprise the data behind CPCs for Walmart. This is not really surprising to me. Again, that 46% number in terms of increased efficiency compared to Amazon is really wild and really important to keep in perspective looking through all of these. This is an interesting one as well for AOV.
Yeah, AOV was increasing. And it was interesting to see that it followed the same trend as 2022. There's not it's hard to look back now many years and not find anomalies in supply chain and inventory and impact of the economy and inflation and all of that on these numbers, right? Now more than ever, we are not living in a vacuum. In the advertising space, there's so many external influences that are impacting us. But I found it really interesting that each quarter AOV was increasing. Not super surprised to see Q4 driving a higher AOV. But we do know that there are bargain shoppers in the holiday season as much as any other time. So it was interesting to see it peak that much. But again,
Mhm.
that indicates in the back half of 2023, momentum, or at least confidence in the economy, was gaining some momentum.
Perhaps that, though, looking at this, even if it's very marginal, that AOV, average order value on Walmart, was higher in 22 on
Yeah,
average,
with the exception of Q1. Yeah, it
with the exception
was.
of with the exception of Q1, but
Yep.
overall, throughout the entire year, that average order value, people were ordering on average a greater amount of value,
Yeah.
buying
That's
products with greater value in 22 than 23.
right. And that could have to do, and again, when we're talking AOV, so AOV is sales per order, but on Walmart, it's sales per unit because we don't have that order
Mm,
measurement. So this indicates that they were buying, maybe they bought the, you know, premium brand, and they're now buying one below, right? One tier below. It's got a slightly um a little bit of a discount. They switched products, and or it indicates that brands were having to drop prices in order to
yep.
remain competitive in this space where, number one, there's more competition, and number two, people are being a little more conservative spending their money. And so we did see a lot of brands having to, decrease prices, or test decreasing prices, or run promotions, or whatever that might be, in order to maintain sales volume, or order volume. And so that slight decrease does indicate one or both of those things were happening.
Yeah. Wow. Very, very interesting. Conversion rate.
I know, and conversion rate declined by quarter on Walmart, and we stayed really, really close with 2022. It does, we are seeing that 2023 Q4 conversion rate was slightly lower than 2022, but
Mhm.
ultimately this metric was running hand in hand with 2022. Um, I do want you to keep in mind, like, why is conversion rate down in Q4? That seems insane to me. Keep in mind, conversion rate for Walmart is units per I'm sorry, order units per click, right? Not orders per click, but units per
Mhm.
click. Um, but as there is a lot more shoppers, that clicks base, that denominator grows. And so sometimes that can dilute conversion rate, even though you're seeing an acceleration of sales overall.
Mm,
So it could just be people were only buying one unit per order. We actually saw that relatively flat. So it really just has to do with the volume of traffic increasing so significantly, that was driving, apparently can driving conversion rate down.
that makes more sense. I mean, would people seeing more ads potentially, like, increased competition, that also plays a hand
Yeah.
in the effect here? Yeah, that makes
Yeah.
sense.
And, as we've seen it on Amazon, we've seen it on Walmart, as they change the layout of the results page or any of their pages, the more that you're surfacing ads, the more visible ads are, the more likely they are to garner a click, right? If you have 5 ads on a page and two of them or if you have 5 listings on a page and two of them are ads, you have a 60% likelihood that they're going to click on something that's not an ad. If
Mhm.
you increase that to 4 out of 5 are ads, now you've got 80% chance that they're clicking on that ad or on an ad. And so you just start to see the volume of ad clicks increase
I see.
as you increase presence on the
A
page. So
and
that could go on to do it.
Walmart's been changing a lot. They've changed a lot about the results that people see when people are shopping for something. So that's a potential indicator as well.
Which I appreciate. Keep testing, see what works.
Yes.
Like, I never, fault Amazon or Walmart for testing those types of things out. You just have to be conscious when you're reading your data of what are all of those external influences that, could be creating that question mark
Yeah.
as you're
Okay.
reading.
Interesting. SPC on Walmart.
Yeah, sales per click on Walmart actually remained relatively flat. As
Mm,
we looked at in the combination set section, AOV was a little bit lower, but increased throughout the year, and conversion rate kind of did the opposite, right? So we saw sales per click, or value per click, relatively steady. Now, combined with increasing CPCs, that's where we saw that efficiency decline. So, the value of each click was relatively the same, but brands were having to pay more for that traffic. Again, efficiency is declining a little bit as we expect as a marketplace grows and evolves, but still a hefty premium. So we don't say that to scare you in any way.
Yeah, of course. That makes sense. Well, okay, before we get into Amazon, what are so we evaluated Walmart as an individual marketplace. Knowing this data, Laura, what should people's main takeaway be for Walmart individually?
Yeah, for Walmart individually, it's if you're not there now, go and test it out. Um, Absolutely opportunity there. And, keep in mind, we talk about this maybe not often enough. As you're starting on a marketplace, really understand, don't think you can copy and paste what you're doing from Amazon. The buyer behavior is different. The shoppers themselves are oftentimes different. So the categories, you may see a product excel on Walmart that doesn't on Amazon and vice versa. So do take take Walmart data and look at like categories and things like that excel. How does that overlap with your current um, catalog? And then take a look at what is excelling on Amazon and start with an isolated group of products. Don't necessarily try to advertise every single product in your catalog. Get data behind each one, start testing really intentionally on the platform. Make sure that you have adequate ad dollars behind those products on Walmart that you're going to be advertising, and accelerate those, and then start to introduce more to your advertising efforts on the platform. But ultimately, if you're not on Walmart now is the time to get on Walmart, get established. We know how important Flywheel is on Amazon. Don't think that's any different on Walmart. Get that brand equity and get that building on Walmart and do it now.
What should people that are buying products expect to see on Walmart?
I anticipate more selection and more brands appearing is going to be the number one. And like we just mentioned, my guess is at this stage, Walmart's going to continue to be testing out a lot of different views. So I would say that the results page is potentially going to look different over the course of the year. But ultimately, as a shopper, I would be looking for more variety and with more competition. As a buyer, usually indicates some price competition as well, right? Like they may be battling it out. So
Interesting.
Yeah.
It's interesting for buyers to compare the two as well, because there will be some buyers that are listening to this that are not selling. And so I like the aspect of exploring what that means for them as well. Let's talk about Amazon then. So Walmart, interesting things that are happening. Amazon's a little different of a ball game. Obviously, we already said less efficient, but way more in terms of quantity of sellers and buyers. So I'm interested to see how this shakes out.
Yeah, the volume on Amazon is still relatively unmatched. And we actually saw sales volume increase more on Amazon than we did on Walmart in 2023. But ultimately, we did see softer efficiency throughout the year. 2022 Q4, we're not at Q4 of 24 yet. That really peaked at the end of that year. We didn't quite see that same peak on Amazon in 2023. So it's a big call out. We know we have had the discussions if you're a brand on Amazon that efficiency was tighter and it was squeezing margins.
Yeah, this is interesting to see. Again, ROAS is an indicator of efficiency, correct? And for advertisers, right? So obviously, the lower this is, the less efficient your ads are going to be, meaning the more you're having to spend to get people to buy your stuff.
Right. This is an indicator of how much, the higher the line is, the more you got in return for each dollar you spend in advertising.
Yes. And the interesting thing here is that honestly, the trend, it follows its similar path for Q1 and Q2. After that's very interesting to me, that Q3 dropped so significantly compared to 2022, and that Q4 ended up so much lower than 2022 as well. Holiday season. That to me, for Q4, for efficiency in Q4 to end lower than Q1, that's wild to me.
Yes, and I know this again, it's difficult in some ways when we're looking at it without the numbers. I will just highlight that year over year efficiency was only down 4%.
Okay.
It was down 7% in Q4. So this looks pretty drastic because we're pretty zoomed in. We want to see the nuances and the changes. But Q4, that's only a 7% difference right there. So only is still impactful to sellers' bottom line. But ultimately, it's not maybe as drastic as it feels here. I promised once we got to Amazon, we'd really zoom in because anything as large as Amazon, doesn't appear to move that much. But I do want to emphasize, while efficiency declined about 4% year over year, total ad sales increased about 55%. Now, this is again, there's a lot of nuances in the data, and we do look at the same brands, but it could be they introduced new products, net new products, and things like that. So yeah, they were spending more, but there was a pretty notable acceleration in sales volume, which really it helps stomach a small efficiency decline a lot more.
Yep. Okay. That makes sense. Okay. Let's talk CPCs then. Interesting.
CPCs, yeah, CPCs did go up. 2023, we're talking, there's competition, right? Like even despite a softer economy, brands were really fighting for each consumer's dollar. And so we saw those CPCs increase. They increased about 8% in Q4. They were increasing throughout the year, but they were down year over year. So CPCs ended down for the entire year about 2%. They were 2% lower than 2022. So all things being equal, relatively flat. But we did see that jump to an 8% premium in Q4, which is what impacted efficiency.
Why is this change? Like the year over year differences are not that great, but the change in like behavior, it just doesn't line up with. It's not the same. 2023 was not the same. Didn't follow the same pattern CPC wise. Like to me, this is telling me a story of like things like are not matching up exactly as they were last year. Makes sense. It's not the same year, at least in 2023 compared to 2022. Are things changing so drastically in the marketplace, or it screams the difference between competition and how the marketplace is changing in general?
Great question. Let's actually skip ahead 3 slides to sales per click. So this is one indicator, right? Brands, outside of competition, brands want to look at sales per click to indicate what they're willing to pay, right? If I know sales per click, and we're just going to do easy math, I'm getting $4 on average for every click. And I want a 4-to-1 return on ad spend. I know I'm willing to spend $1.
Sure.
Pretty simple math there. And so we want to look at sales per click to understand CPCs a little bit. And so as sales per click is softer, meaning conversion rate and or AOV is lower. Okay. That's not something to celebrate, but I appreciate that. As those are lower, we expect brands to be spending less per click, to be willing to spend less per click. And so this is a really good indicator of if CPCs are changing, is it because the consumer behavior was changing and brands were reacting to that? Or is it because competition was changing and brands were reacting to that? And if you look at this graph, this follows the CPC graph pretty closely, right? They saw that buyers were, keeping dollars closer to their chest throughout the first half of the year. They weren't spending as much. They weren't converting as often. And so they kind of couldn't pay more, right? And still be profitable, still maintain those margins that they need to maintain. And so they were spending less per click and maybe losing out on some traffic volume along the way, but they had to do that in order to stay afloat and to stay profitable.
Do you have more that you want to cover on Amazon here?
You can go back to just flip back to conversion rate and AOV. So AOV did increase throughout the year. That's going to impact sales per click, right? This is one of the biggest is people were willing to spend more per conversion throughout the year, which was driving up, CPCs started to increase throughout the year as a response to that because that value increased.
Hmm.
And then if you take a peek at conversion rate, um, that was relatively flat throughout the year. So AOV was really driving the difference in sales per click, but shot up in Q4, which is interesting because we were looking at Walmart a couple minutes ago and how the volume of clicks increased, actually driving conversion rate down in Q4. This one, people were just purchasing more in that quarter, which tells us that there's already a strong consumer base that regularly shops on Amazon that did not increase
Hmm.
as much as Walmart, which is emerging. And maybe people were finding them and purchasing and shopping from Walmart, again, online specifically during the holiday season, where they
Yep.
either routinely go in store or to Amazon. But they started to pick up gifting on Walmart, which is why that traffic base increased on the platform.
There's a lot of data here. I want to ask for a summary on what points, what does this mean about the consumer on Amazon in 2023?
The consumer on Amazon started out pretty conservative. They were less willing to part ways with their dollars. They were purchasing less. They were definitely looking for the bargain products, whether it was, again, as we mentioned, something on promotion. They were looking for their favorite to drop the price, or they were finding a new favorite that came with a lower price point. And so we saw a very price and, dollar conscious shopper in the first half of last year. And that seemed to recover a bit in the second half of the year. We started to see those things pick up and indicate that there was a little more confidence in the economy. And
Hmm.
with that, we saw competition really pick up. Brands were really ready to capture the sales volume that was available.
I want to kind of land the plane. I want to open the door after this, but I want to just zoom way out. What does this mean for, based on the trends of the last 2 years, what you're seeing? You have a really good perspective on the consumer for Amazon and Walmart compared to one another and individually. What do you think the shopper, the buyer, is going to do in the year ahead for Amazon and for Walmart? What do you think?
Oh, this is an election year, right? And so
Ooh.
there's so many things that can be thrown in the loop, which will impact confidence in the economy and buyer behavior. So I'm going to leave it up to the news cycle and um, our candidates to um, throw the influences around that could really impact this year. And so that's probably, I know that's a big cop out, but that throws significant uncertainty into how we predict. Given if we assumed we were in a vacuum, I would anticipate that AOVs and conversion rates probably return closer to the Q3 levels. I think there's more confidence in the economy than there was in the first half of last year, but obviously not the same as Q4
Hmm.
with holiday shopping. And I'm hoping that there are some steady increases. I do anticipate competition will remain fierce. And so, one of the biggest topics of conversation from last year that will remain main topics of conversation this year is going to be profitability.
Yep.
Really
Yep.
understanding your COGS, your cost of goods, and incorporating that into your advertising strategy, making sure you understand what are loss leaders, where do you have margin that you can push, and really balancing all of that out rather than treating each product, just based on the price point and the ad spend that doesn't incorporate that margin. And so, as competition increases and as there's some skepticism from consumers, uh, sellers are really going to have to pay attention to their bottom line.
Yep. That's a boatload of information. I know it's an impossible thing to predict the future, but like we said at the beginning, data like this helps us understand at least what that picture might look like. Election year certainly throws a wrench in things. That it certainly will change things a lot.
Putting it
Um,
mildly, yes.
Putting it mildly. Laura, is there anything else you want to say? Totally fine if not. I want to leave the door open. Otherwise, I think we've told a pretty complete story of what happened with the last 2 years.
I would agree. I think that last piece is the bow on top, but something to really emphasize and pay attention to is make sure you understand those margins that you have and that you're adjusting your efficiency targets, what you're willing to pay for your click based on that sales per click, and really hone in on that and differentiate your marketing strategy based on where you've got margins and where you have opportunity to be really profitable.
Yep. I love it. Laura, thank you so much for breaking all this down. You are the master at work. Really appreciate you coming on. And I will certainly, I am sure, see you again on this podcast soon. So thank you for being here, Laura.
Thank you.
Thank you so much for listening to this episode of Human in the Loop. My name is Cameron. I hope you learned a lot today. I know there's a lot of data, so I would encourage you to go back, maybe watch some of the highlights or look at the show notes for a summary of the data points that we covered. And I'd also encourage you to follow us on social media. Follow me on social media. You're going to keep up with, there's a lot of information that we're going to be releasing, a lot of different stories. I personally am making it a point to interview and chat with a lot of up and coming brands, typically on TikTok. I've been in touch with a number of TikTok brands that are starting to crush it. And there's an interesting difference between a lot of these brands and a lot of the brands that are already well established. There's a new way of doing things in the e-commerce world today. And a lot of these brands have figured it out with how to mesh content, the machine, and AI with their selling strategy. It's really cool to see. So subscribe to the podcast, subscribe to our social channels, and I will see you next time.